trading day. The Abbott government's maiden budget will be handed down in less than a week now. Already many are labelling it a horror budget of tax hikes and cuts to spending as the Treasurer tries to wrestle the budget onto a more sustainable path.
How bad, though, really is the situation? Sky News business reporter Carrington Clark sat down with CommBank's chief economist, Michael Blythe, to find out if Joe Hockey's characterisation of Australia facing fiscal disaster was actually valid.
Well, the longer run story there's been in place for a while. I mean, one of the reasons we started producing these intergenerational reports back in Peter Costello's day, which was a while ago now, of course, was because we knew there were a lot of long run challenges coming through facing the budget. International organisations like the IMF and the OECD have been warning of these things for a very long time as well, and about the need to start doing things now in terms of setting us up for that longer run fiscal sustainability. Things have been done. It's not as though this is really the start of the process, but clearly it is becoming a little bit more urgent. The problem the government really has, of course, is doing things setting up for the long run. It does also have some implications for the short run, and that's where I think the real, if you like, budget issue comes through. Is now the right time to be really aggressively cutting back on the fiscal side of the equation? And we've had plenty of examples in other countries over the last few years of just how damaging to economic prospects that can.
Rumours are swirling that the government is looking at a deficit levy or a debt levy to put in place in the short term. What would a tax like that do to the broader economy?
Well, are you taking money out of the economy? Call it a levy tax or cut back in spending. It's really the same thing. And I don't think people fully appreciate just how strong the fiscal headwinds actually have been in recent times. If you look at 2013, the latest GDP data, cutbacks in government spending then actually reduced GDP growth by 0.5 percentage points. First time that we've seen a negative detraction from growth from that source in over 50 years. So it gives you an idea of just how we struggled to produce that 2.5% type growth that we clocked up in 2013. So anything that continues that path will continue those sorts of headwinds, and at a time when the economy is still pretty fragile in many places, and certainly sentiment is very fragile, then anything that goes too aggressively is
What are the likely impacts on the broader economy of cuts to government spending or tax hikes?
Well, it's hard to tell the difference between the two. To be honest, they're sort of opposite sides of the same coin. So I think it really just comes back to that you are taking some spending power out of the economy, either because you've cut somebody's transfer payment from the spending side of the equation, or you're making other people pay more tax. Now, the sort of numbers that are being thrown around at the moment would be equivalent to about 0.3% of GDP, the sort of potential revenue impact of these proposals. So it's measurable, but it's probably not enough to knock the economy off course.
Is the government therefore better off waiting until these green shoots that people talk about the economy recovering have fully formed before looking at cutting back? Is it more about putting in place the structural changes at this point without actually cutting back at this point?
Well, I think that's exactly the way it should go. Now, we've clearly got to start laying the framework. It's a question of whether we need to start going hard from day one, if you like. And we've always had this problem in Australia, I think, of a kind of a 4-year budget cycle overlaying a 3-year political cycle. It's always been very hard to disentangle the two. So I think one of the interesting outcomes of the government decision to start producing 10-year budget forecasts is that you can actually get a bit more separation between the politics and the fiscal side. So potentially you certainly can announce a lot of difficult decisions on budget night, but some of those may not start for a few years. 10-year horizon actually gives you a time frame where you can actually credibly produce a budget forecast within that, without trying to squeeze it into that 4-year or 3-year political cycle.
Do you have a time frame of where you think those cuts should start to come in? Should it be at about 4-year mark or 5-year mark, or do you have an expectation of when you think they would be best put in place?
Well, I think a couple of years from now, the bulk of the mining investment downturn, that's the big sort of domestic threat to growth, will be in place. Equally, the offsetting increase in exports will be well and truly underway by that point. And certainly it'll be very clear by then whether this growth transition towards residential construction and non-mining business investment is working or not. At that point, then clearly the economy is running at a more normal pace. You can focus on those longer run issues and start introducing some of those factors and changes that you need to put in place for the longer run.
Now, you've mentioned the volatility in income that Australia's experienced, and that also feeds into the volatility in tax receipts because Australia is so dependent on company tax income and obviously income tax for people. Many experts tax experts have suggested looking at reworking the tax system to be more reliant on consumption taxes and things that are less volatile, land taxes, mining income taxes. We seem to have consensus around that. Is there a way to move to a more efficient taxation system, and how big an impact would that have on the economy for us going forward?
Sure, of course, when you pull out the economics textbook, there's plenty of recipes there for the ideal tax system. And in fact, we had an enormous inquiry only a few years ago, the Henry Tax Review, that went through it chapter and verse. But I mean, in simple terms, the answer's always been making the base as broad as possible, which allows you to set the rate as low as possible. From a government point of view, I suppose taxing areas that are more stable and not subject to the same sort of cyclical ups and downs that things like company profits are, makes longer-term budget planning more reasonable as well. So what governments would love would be a stable source of revenue growth without much of a cycle in it, and we could tailor the spending side to that. Economies like Australia, I mean, we are a small economy in the global scheme of things. We are exposed to the rest of the world. I don't think we're ever going to have that kind of level of control or certainty on the revenue side, and that means that fiscal policy will be a process of continual reform and improvement, I think.